Okay, let's dive into something really interesting today.
Yeah, sounds good.
We've got this piece of source material you sent over. It's about a European crypto firm making a pretty significant move.
A strategic one. It definitely ties into a broader trend we've been seeing.
Exactly. This article lays out their plan, putting Bitcoin onto their corporate balance sheet.
Right, but it's the details that really catch your eye. The how, and maybe even more importantly, the why.
Totally agree. And so our mission in this deep dive is to take this source, this article you've given us, and really unpack it.
Pull out the key bits.
Yeah, figure out the most important takeaways for you, the listener.
All right, let's do it.
Okay, let's dig in.
Yeah.
So the company we're talking about is K33.
Right, a Norwegian crypto brokerage firm.
And they're stepping into that space, like we've seen with MicroStrategy and others, deciding to hold Bitcoin in their treasury.
It's definitely becoming more of a strategy companies are considering. The core action is allocating capital, buying Bitcoin, holding it right there on the balance sheet.
Yeah, alongside their regular assets.
Yeah.
But what really stands out in this source is how they're doing it. They didn't just, shuffle existing funds around. They specifically raised money for this.
Yeah, 60 million Swedish krona. The article says that's about $6.2 million US.
And that cash is earmarked only for buying Bitcoin. That seems pretty deliberate.
Very. And the way they raised it is interesting, too. Based on the source, it's a mix.
Okay.
You've got 45 million SEK, so roughly $4.6 million from convertible loans.
Convertible loans. Okay.
And get this, they're interest-free, apparently, maturing in June 2028.
Interest-free. Wow. The rest?
The other 15 million SEK, about $1.5 million, came from issuing new shares and warrants.
Ah, the warrants.
Yeah.
That part caught my eye, too. The source mentions these give investors the right to get more shares later.
But there's a kicker, as the article puts it.
Which is
if they exercise those warrants before March 2026, they get additional warrants on top, which could mean even more capital for K33 down the line.
Right. The source suggests it could push the total potential raise up to 75 million SEK, maybe $7.7 million.
And crucially, the plan is to use that potential extra money for more Bitcoin, too.
So it's like a phased approach almost. Start with the 60 million SEK for Bitcoin now.
Exactly. But build in a mechanism to potentially add another 15 million SEK later, boosting their holdings further.
And doing the quick math, based on the Bitcoin price the article mentioned, just over $108,000.
Yeah.
That initial $6.2 million could let them snag, around 57 Bitcoin.
Yeah, up to about that much, which, for a company of their size, that's a decent starting position.
Definitely. Okay, so let's get to the core question. Why? Why do this?
Well, they've actually named it the Bitcoin Treasury strategy.
Right. It sounds very intentional, not just, hey, let's buy some Bitcoin. The conviction seems high here.
Extremely high. The source quotes the CEO, Bull Jenssen. He's pretty blunt about it.
What's he say?
He says he believes Bitcoin will be the best performing asset in the coming decade. Simple as that.
Wow, okay.
And the plan is just to accumulate as many as possible.
He also had that quote, didn't he? Something about building their own reserve instead of waiting for the government.
Yeah. Why wait for the government to build a Bitcoin reserve when you can build your own? It's a very proactive stance, taking control.
But, okay, beyond just thinking the price will go up, the source connects this to their interim report, right?
It does. And this is where it gets more strategic, perhaps. Jensen calls Bitcoin a strategic enabler.
It's strategic enabler.
Yeah.
Okay, what does that mean in practical terms when K33, according to the source? Sounds like more than just an asset sitting there.
Exactly. It means they plan to use this Bitcoin treasury as a foundation, like a base, to launch completely new services.
Oh, interesting. Like what? Did the article give examples?
It mentions one specifically, BTC-backed lending.
Okay. So they're not just going to sit on it. They want to leverage the holding itself.
Precisely. Use it to create new revenue streams, build out new capabilities for their business.
How exactly would holding Bitcoin let them do lending? Does the source elaborate much?
It doesn't go super deep into the mechanics, but the core idea seems to be that having that Bitcoin on the balance sheet provides the necessary collateral or asset base.
Right.
So they could either lend Bitcoin out directly or perhaps accept Bitcoin as collateral from borrowers for other types of loans. It basically unlocks new product lines tied directly to their crypto assets.
That really shifts it, doesn't it? From just being a store of value on their books.
Or a speculative bet.
Yeah, into an operational asset, something that actually fuels business activity.
That seems to be the goal. The source says the strategy aims to, yes, strengthen their financial position, but just as importantly, unlock these new revenues, enhance products, build partnerships.
Partnerships, too.
Yeah, it even mentions they're working with other Nordic companies that are also pursuing these kinds of Bitcoin treasury strategies. So there's collaboration happening.
Okay, so very deliberate plan, clear strategic rationale beyond just price appreciation. How did the market react?
Well, this is where it gets a bit counterintuitive, maybe.
Oh, no big stock pop?
According to the source, no. On May 28th, when the news broke, K33's stock apparently traded flat and actually closed the day down slightly, about 1.96%.
Down. Wow. Okay, that's not what you might instinctively expect, especially compared to some other examples the article brings up.
Right, and this is where the nuance comes in. The source contrasts K33 with GameStop.
Okay, GameStop.
Remember, their shares jumped almost 12% right after they just announced they planned to buy Bitcoin.
Just the plan?
But then, crucially, when they actually did the buying, their stock dropped 11%.
So up on the news, down on the action. Weird.
And then there's another example in the source, blockchain group based in Paris.
Right.
Their stock reportedly went nuts back in November when they started buying Bitcoin, like up 225%, a huge spike.
Okay, so we have K33 down slightly, GameStop up then down, blockchain group way up.
Exactly. The takeaway from the source, looking at these different cases, is that there's no single predictable market reaction when a company announces a Bitcoin buy.
Yeah, it seems really variable. Depends on the company, the market mood, maybe the specifics of how they do it.
All of the above. Probably. The short-term stock impact isn't guaranteed to be positive at all.
Okay, so let's try and summarize then. If we're pulling the absolute key insights from this source about K33's move, what are the big ones for you?
Well, first, I think it's the very defined strategy, the dedicated financing, those convertible loans, the shares, the warrants plan. It shows real intent, not just dipping a toe in.
Right, it's structured. Second,
and I think this is maybe the most important bit, is the why. It's explicitly framed as a strategic enabler.
using the Bitcoin to build new stuff.
Exactly. Leveraging the asset for things like lending, aiming to directly generate new revenue and capabilities. It's operationalizing the Bitcoin.
Okay, and third?
And third, just that market reaction piece. K33's stock being flat or down slightly, especially put next to the GameStop and blockchain group examples from the source.
Yeah.
It's just a really clear reminder that these announcements don't automatically mean a short-term stock boost. It's much more complex than that.
So for you listening, the story of K33 really highlights this evolving view of crypto assets in the corporate world.
Mm-hmm. It's moving beyond just holding it as an investment.
Yeah, companies are starting to figure out how to actively use these assets, use them as tools to build new products, new services, even new partnerships.
Which leads to kind of a fascinating final thought, building on that strategic enabler idea from the source. If companies really can successfully use a volatile asset like Bitcoin, sitting right there on their balance sheet, to directly unlock totally new revenue streams and forge new kinds of business relationships.
Yeah. What does that mean?
Well, how fundamentally could that change the traditional playbook?
Mm-hmm.
You know, for corporate finance, for strategic asset management, if your assets can suddenly do more than just sit there?
That's a big question. How does holding something volatile potentially change the core operations and strategy of a business? Definitely something to think about.